Welcome to another episode of Coffee with Samso. I've got George Bulk here with me. I was trying to figure out how to pronounce it properly last night. From Northern Minerals, we're here talking rare earths. George, maybe you can start with just giving us an intro about yourself.
Yeah, look, so I'm Managing Director, CEO of Northern Minerals. Actually been the company for 9.5 years. So it's been a long, fruitful journey. Also been associated in the rare earth industry since 2005. So had an exposure and interaction with the industry for the past 14 years.
Yeah, I mean, rare earths is one of the things, I've mentioned it a few times. It's sort of, everyone goes, oh, rare earth industry, but it's actually components to that. I think you being in the industry for so long, maybe you can just give us an idea of, well, you know, what is the REE that everyone throws that?
Yeah, look, it's you know, we've seen the whole episode with lithium in the recent sort of 5-6 years of the bubble, and you know, it's been a simple product to discuss because there's one element. With rare earths, there's 17 of them. And so you can imagine the array of products and applications that rare earths go into, if you like. So we have to make sure we keep it a very simple message when we're talking to investors in the broader community, because you can really get caught into talking for hours on end about applications and products. So, you know, it's a very new space, if you like. You know, you've only really seen the application of rare earths in the last 60 years. What has caused this last focus on rare earths has been the permanent magnet, which goes into the permanent magnet motor. And so the real big elements are neodymium, praseodymium, dysprosium and terbium. They're what they call the magnetic rare earths, and have a real key application into these new magnets.
Yeah, it's when I did a write-up on rare earths a while ago, and it's from there that I realised, you know, what is it about? It is about permanent magnets, predominantly. There are other uses, obviously.
Yes.
Like you've just mentioned, and also there's so many rare earths, and people just forget it. They just think, oh, we've got a rare earth project, you know. But it is specific and to only what three or four elements in that list. Is that right?
Well, there's four of the real big value drivers, if you like.
My experience with rare earths, going back, must be around 2010, when sort of when the price sort of had a surge, everyone's saying, oh, there's not enough supply, there's a price surge, there's market moved. So what is the pricing status of rare earths at this point in time? So
for our company, we've got what's called heavy rare earths. So we really focus on dysprosium and terbium. Okay, so about 55% of our revenue is dysprosium. So if you look at the pricing of dysprosium, it's gone up nearly 50% this year. So it got up to $300 a kilo, and it's softened in the last month to about $270 a kilo. Way down from the boom of 2010 you talk about, 2011, when dysprosium hit $3,500 a kilo. Now that's an unsustainable price. So you want to see something that obviously is profitable for everybody. But at 3,000, you really get that whole effort going into substitution.
I mean, that's a big difference in pricing, $3,000 to $300.
Absolutely.
In terms of, like, where do you see, I mean, do you see rare earth as one bulk pricing thing, or do you see components within those four elements that we talk about?
If you look at the state of the market at the moment, the challenge we have is that China really dominate the rare earth space, okay? And we sort of sometimes focus on the mining and processing, as in beneficiation. We've actually got to have a look at all supply chains. And so what's the real key is making sure that we have separation capability so we produce the individual elements, okay? And then you start getting into being able to target the markets and then look at pricing for the individual elements. At the moment, we, for example, produce a mixed rare earth carbonate. So that's got all the rare earths in it together, if you like. So you're not really able to extract the value of that product when you've got them all still together, if you like. You really need to get into separation.
I guess in what sort of brought out this interest or recent interest in rare earths, obviously. It's our trade war, the old Trump and Xi Jinping kind of story. And I remember when there was a moment where someone said to me, oh, you know, this company was, they were sort of closing shop, and eventually overnight there was rumors that they're going to tighten up the rare earth supply, and everyone's lights are back on, you know, in full flight. So this obviously geopolitical issues is the trigger. I don't know. Do you think that is the trigger?
Yeah, look, absolutely. I mean, if we just take a step back in the journey and history of rare earths, if you like, in about 1992, one of the former Chinese premiers said, China has rare earths and Saudi Arabia has oil. Now, you can imagine 1992, most people sat there and went, yeah, whatever. That's fascinating, right? And I suppose that led to highlighting now in reflection about how long-term thinking, where they saw what metals were the metals of the future, etc. And we got caught napping. And I'm talking we being just the general society going, yep, no problems at all. China developed their downstream processes, including the mines. And next minute, before people knew it, we fast forward to 2010, and China now has control of the rare earth industry. And they've been able to leverage that industry to really provide incentives for companies from around the world to take their processing to China to access the rare earths. Okay, and then what you now see is people going, oh, hold on, we're over-reliant on one country, for example, given its communist regime. It's seen more as a one entity, if you like. So then in 2011, there was the dispute between China and Japan over the islands, and then all of a sudden China turned around and said, right, we're stopping the exportation of rare earths. Right, that's what drove the prices absolutely AWOL. Okay, you then look what has happened since 2011. The US and Japan ran off to the WTO and complained and put a case against China to stop the banning of exporting of rare earths. They were successful, I think, in about 2013-14. And so then next minute, everyone got comfortable and relaxed and went back to the former state of unknowingly relying on China as the supply of rare earths. We now get to 2019, and all of a sudden, with these trade wars ongoing, people are starting to analyse the periodic table and supply chains and saying, we're relying on the Chinese. So it's no fault of the Chinese, it's the fault of the rest of the world that hasn't invested and developed supply chains outside of China. Too many individual companies get very, very comfortable with getting reasonable supply at a cheap price. So, you know, this culminates into where we are today of now people panicking saying we don't have alternatives.
I mean, in terms of rare earths, everyone talks about liners and liners and liners.
Yep.
Because nobody else is out there. I mean, I know Arafura because from past work that they exist. Even personally myself, I didn't know about you guys till recently when I read about it, and then we had a conversation, and then you enlightened me a bit. But to me, most general people out there wouldn't know about even Arafura or yourself. Everyone just knows about Linus. You know?
Well, look, Linus has done most of the heavy lifting. I mean, there's no question that they've been caught up in a lot of social issues in Malaysia and the like. And so, you know, they've had media for various reasons, if you like. But when you look at Linus, they've done a lot of the heavy lifting. Okay, they've been at it since, you know, for 10 years, developing their project and resource, if you like. So we've seen some other projects. So the Mountain Pass in California. That was operating for 60 years, and then they built their mega project, and then all of a sudden that economically failed, and all of a sudden you were left back to Linus as the topic, if you like. You know, that project's been bought by the Chinese, and again, before this whole concern, geopolitical, etc., that was bought from under the nose of the US, if you like. So a lot of people, and you know, I have. You know, I enjoy a round of golf, and I remember for recent years, you sort of go along, people say, oh, what do you do? And I say, I run a rare earth company. What are they? And then I say, oh, look, I also chair a lithium company. And they go, oh, lithium, look, you know, I've got a lithium battery. I know all about lithium. And I'm like, well, I know that you know what lithium is, but I don't think you know all about lithium. And I think what we're again seeing at the moment is you need to understand the supply chain, right? So it's all fine and well and good to mine lithium and to produce a concentrate, but okay, what then next? And then you start seeing where the supply chain all leads back to China, if you like, so you've got the same issue. But rare earths, the reason why a lot of people have ran away from the topic is we had a massive bubble in 2010-11, equity markets, people made a fortune out of share prices going through the roof, and some people held on too long because they believed in the thematic. The equity market ran away from the rare earths, and then a lot of people were caught with shares that were worth 1/10, 1/20th of the value, if you like, and then a lot of people left the industry. So you had 500 projects in 2010-11 being evaluated, explored, etc. All of a sudden you've got 10s or 20s of the number now. So it's a tough sector to promote because of the fact there's 17 elements.
I think that's one of the things that interest me in terms of what you guys doing on minerals and the oil rare earth sector is actually it's simple, but it's very complicated. There's so many segments that you need to understand. And from where I come from, where I try and bring the message out is, rare earth is not gold. It's not one element. It's not lithium. It's not copper. It's actually a suite in there that you need to have understanding. And also the grade implications and what you use it for in your market is very, very different. It's almost opaque, a bit like the tungsten industry. I always refer that back because it's very interesting. China has heaps of it. They use heaps of it, a bit like your rare earths and all this kind of stuff. But at some point in time, they seem to say that they're importing concentrates, and you're going, how does that work? You know? I think we had a similar conversation about rare earths, about how China seems to have a lot of it, but I think that they have a low grade component to their resource, as opposed to the ones outside happen to have a higher grade, and they can't. There's that competitiveness that creates that imbalance, I guess, in some sense.
The rare earths is a fascinating industry, and when you've been, I've been involved in the mining industry for 30 years, if you like, and spent a fair bit of it in the likes of nickel. In the rare earth space, you've got that whole thing about understanding the front end of it. So you really need to understand your mineralogy. I think that's probably one area that I would suggest people to have a look at. What is the mineral composition, both of the mineral that the rare earths are contained in, and then have a look at the host rock. So that's at the front end. And then unquestionably, you have to understand your market. Okay, you've got to understand what it is you want to produce, what markets you want to target, sell into, etc. And then you've got everything in between. And a lot of that in between is the technology, if you like. So it's, you look at China, for example, you mentioned before, China's got a really low grade of heavy rare earths. They're found in an ionic clay, very, from 0 to 15 meters from the surface, if you like. A lot of the Chinese methods have been using in situ leach. So they drill, 4-inch holes into the deposit, pour ammonium sulfate and other chemicals in there, and they basically let the gradient of the hill percolate and develop a pregnant liquor at the end of it they capture in these sumps. Now, one of the biggest issues you've got from an environmental perspective is that you don't have the right host rock to do in situ leach. So what you're ending up with is probably approximately 30% of the chemicals that you're putting into the ground are not being captured at the bottom of the hill. They're actually going into the natural habitat, into waterways and all the rest of it. And you can imagine the environmental disaster that they're making. I remember someone in China recently presented 4 or 5 years ago, and his comment was, rare earths are not part of the clean energy future. And you sort of sit there and you think, well, how did you draw that conclusion? Now, after a while, when you sit there and listen to his conclusion, he's saying, if you look at the cradle to grave aspect of rare earths by mining them in situ leach, the damage you do to the environment up front using that methodology of mining will never be recovered and brought back by having the final products of a hybrid vehicle, electric vehicle. So he was looking at the holistic approach, and he's dead right. So, these grades in China are 20 to 40 parts per million dysprosium, right? at our project, we've got 800 parts per million. So, you know, that's somewhere between 20 to 40 times the difference, okay? Now, under Australian rules and regulations of mining, etc., you know, we've got certain standards that we have to mine. Now, ours is a very different rock. Ours is a hard rock setting, so we can't do in situ leach anyway. So just so people understand, it's not apples and apples. But we have to mine it, we have to crush, go through a very detailed process to get to where the Chinese operations get to. And then you've got tailings dams, evaporation ponds. So it's not a level playing field because, you know, we're putting in a lot of costs to make sure that we are extracting the ore from the ground and processing it in a very long-term sustainable mining, environmentally friendly process. And that comes at a cost.
Like the tungsten industry, when I was promoting, you know, the tungsten market and everything, we heard from the Chinese geologists and people like that at that time, this is going back six years maybe, that they were already tightening up on the environmental issues, and it's a strategic mineral. So you think that the government says, okay, we know we'll close one eye and you guys do what you like to do, or we. But what they were doing is they were actually tightening up all the environmental parameters that they were having, and they were saying that 0.1% was actually mineable then, and now we in it extra 0.1% because of these issues. And I think maybe I don't know, maybe you would know is whether all these environmental issues would come into play in this sector, and the way that they've been mining might be a thing of the past in the next couple of years or so, and things are not going to change overnight, obviously. And then that will bring the balance back, you know. And that's why when you were mentioning it, I thought, this is more interesting industry than I first thought, because there's a strategic play here, a bit like the uranium story that we talked about previously with Mike Young. But I think this is a closer to result than say the uranium. Uranium's probably got maybe 5-10 year kind of lifeline, maybe. But you guys might be closer than, because in the last 10 years, our developments, the business cycle is shorter. We're 7-10 years now. Things change shorter time.
Yep.
You know what we think will happen in the future was 10 years before. Yep. Now it's like maybe 2 years or 3 years. You know. Yep. Well, what's your opinion on that?
Oh, look, I mean, there's no question that everything we do is compressed. You know, and I sort of see that, 20 years ago, you had a crash, you had a boom. These things happen once a year or once a decade. Now they're happening 4 or 5 times. Back in the 80s, you'd wake up and by the time you got the newspaper, it was from maybe 1 or 2 days ago. And by the time you're reading things, those things are about an event that happened days ago, if you like. We wake up in the mornings now, grab your phone, and you are looking at instant data. So depending on what time you wake up, you're seeing how the market's closing in the US, you're seeing what's happening over there, and that influences what's happening here, if you like. So, and we're very responsive. People see one bit of data and they feel like they've got to do something about that data. And it doesn't allow us to plan and take time to go through things, if you like. So, I think you're dead right. Everything's getting brought, the demands and a whole host of things. Mining, we've got to respond to that, but things take a lot longer in mining in terms of going from exploration to production, if you like. But when people start saying, I need this product, we can only respond so quickly, if you like. And that's a problem with booms and busts because, 7-8 years ago, geologists just left the mining industry because there was just no future and they decided to go taxis or whatever it was. Getting them back's very difficult because a lot of them are so scared that there'll be another bust and they don't want to go through that, both emotionally, financially and all the rest of it. But we don't control that. I mean, those cycles are usually on a bigger platform, if you like. Going back to China, they want to make it a more environmentally sustainable planet. I mean, that part of this planet, they live and they, I suppose they have to sit within their backyard that they create, if you like. So there's a lot of push over there to really clean up practices and that. Those things don't happen overnight, if you like. They're a process that takes time, if you like. And I mean, we hope that we end up with a socially conscious planet You want some things to be standard across the world. I mean, there's no point having environmental standards in a couple of countries, but not everywhere else. I mean, because you're only as good as your weakest link. I mean, you look at Burma recently, there was a lot of talk that Burma, which has got this ionic clay, tropical sort of mineralisation that goes through there, they started mining theirs in a similar way to the Chinese and exporting it to China. And China's responded by banning that, because I believe that they see that even though they're only buying the product, by buying the product you're actually rewarding operators for bad practice and creating a stain in that country, if you like. So we're seeing action, if you like, but we're then playing in a very opaque market where you're not watching the fundamentals of supply and demand drive price. And by that not happening, you then don't see natural responses to a broken industry, that if everything worked properly, the price of rare earths would be going up, the response in the equity markets would be going up, there would be confidence and people would be investing. That investment adds liquidity, liquidity adds people being able to raise money, and then you start seeing momentum. What you're seeing at the moment is, I mean, you look at most of the share prices in the rare earth space in Australia, they're fundamentally flat. They've had some spikes along the way, but there's been nothing like what we saw back in 2010-11. Now, I'm not saying that was right, but when you don't have a response in the equity market, when you don't have a response in liquidity, where's the money going to come from for companies to advance their projects? And that's a challenge you face. Like at the moment, you would naturally think that every rare earth company you know would be going flat out and just be, you know, really taking action to the response to this geopolitical issue. A lot of them haven't been able to do that because there's not enough supporting finance and capital to drive their plans and behaviours and aspirations, if you like. So it's a really difficult market in terms of seeing how the equity markets have responded to a geopolitical issue.
But also the other thing is, you know, going into what Northern Minerals is doing, like you're actually producing something. You've got a pilot project, a pilot plant, I should say. So you mentioned before that you guys are actually producing something, yep. Which I think it's very significant in terms of the progress of a project / company, because you're already there, you know, in such a difficult environment. You're sort of one step away from aligners, if you want to use that as a comparison, which is, I think it's quite important to point out. You're not your average rare earth company, if you want to put it that way.
Yeah, look, we took a bold approach back in 2017 where, you know, we had our study. The study meant that, you know, to go to what we classify as our full-scale operation would have been a significant capital injection. There's no money, there was no supporting rare earth pricing to really get people confident enough to give the money behind it. We were putting in new technology in terms of a flow sheet. You know, people haven't extracted heavy rare earths from a hard rock xenotime mineralisation. So we took the bold approach of let's take steps to getting to that end game, if you like. So back in 2017 we said, right, let's build a pilot plant. Let's prove economically and technically that this project works. Okay, so, you know, we've invested $70 million in building the pilot plant at Browns Range, east of Halls Creek. And yes, as you say, we're now producing products. So, and part of that was to try to demonstrate to the world that there is alternative supply. The biggest risk we faced was that if we didn't act and others don't act, then people start saying, actually, I think rare earths are broken. I think we're going to have a monopolistic supply chain really cornerstoned in China. And so when you start looking at people developing products or bringing new products onto the market, they'll start to say, do we want to take risk of investing in our supply chain, or sorry, our production facility, to have elements going into it that we have to rely on one market? So we thought, look, for a lot of reasons, we've got to go counter-cyclical, we've got to be brave, and we've got to get in. Now, you know, that means that, you know, we're now in production at the right time, okay? Again, if the market fundamentals are different, we might see a different price of our equity, etc. But, you know, that's life. But, you know, we just recently signed a deal with ThyssenKrupp. So ThyssenKrupp have come now into play as being our offtake partner. But, you know, we make a mixed rare earth carbonate. So our current offering is not sufficient, okay, because there is not enough factories outside of China to separate these products, if you like. So we took the approach of let's crawl before we walk, before we run. So let's put in place an ability to move from being a study manager to being an operator. Okay, so we can demonstrate we've built a plant, we're running a plant. So good to see that people can see that Northern Minerals has the capability and capacity to be an operator, even if it is at a pilot plant scale. Now we're looking into separation technology. So again, a few weeks ago we announced that we're going to work with a US-based group, KTEC, in terms of looking at their separation technology to produce dysprosium oxide, terbium oxide, etc. So you feel like you've always got a bit against you in the rare earth space. We finally shipped some product across to the US to get that started, and the factory's in Florida, so the product hit Dubai and had to stop because we had to wait for the hurricane to go past. But anyway, that's a little bump in the road. But that's our next step of really taking the next leap, is how do we separate it? Because having dysprosium oxide is what people want. Yeah. Then you couple that with a pilot plant, we get to a position some stage, hopefully in the near future, that we hopefully get the right outcomes of this pilot plant. We say, right, now let's build a full-scale plant. You know, that's what we're working towards.
I think a lot of things people don't understand in the mining games is not a short-term thing, it's a long-term journey. And when you get to your stage, it's actually it's a journey that needs to be taken anyway. But it's not trying to find the resource or trying to prove that the technology works, or trying to prove that you can actually extract the elements that you need. And in terms of like, I know we were sort of been talking a lot about the technical part of it, like commercially side or the equity interest side. I mean, you're about to go on a 2-week journey to talk to a few people in Europe and in the States. I mean, what's the feedback that you're getting from the market?
Yeah, look, it's quite mixed actually. You know, you start off. This has been a 9-year journey, coming up 10 years at Northern Minerals. We've invested $230 million. That's $250 million we've spent. You know, that's been a significant investment. I mean, it started off with exploration, but now with the pilot plant. So these are long games, and we've still got a long way to go. So it's not like this is at the end game, if you like. You've seen this whole geopolitical topic. You're seeing a lot of interest in the space, but we're yet to see the equity markets respond. I mean, we've raised, we've announced $100 million of raising to date this year. We've pocketed 72 of that 100. That's all, you know, largely sponsored and supported by Chinese investors. So, you know, the Chinese are the ones that are investing in the industry beyond their boundaries, if you like. So they get the whole strategic piece of this, right? The rest of the world has to respond. You know, they can't expect others to do the heavy lifting, if you like. So, you know, that's a challenge for us. We want to get diversity on our register. We want to be able to have, and I say diversity because, you know, we're a company that's not anti-China, if you like. I mean, China play a role in the rare earth space. So, you know, it's up to others if they believe there needs to be alternative supply chains. They've got to step up to the mark. So, yeah, we head off tomorrow night, head to Europe and to the US.
I think, I mean, just from a new player point of view, I think with everything that's happening in the world, and I think the market for exotic minerals, put rare earths and tungsten and all these things in there, I think the market's probably, not to say it's going to turn, but I think there's rumblings in there. It could happen very quickly, you know. Yep. I think that's. But anyway, good luck for your trip. Thank you for giving us your time. I like to bring you in because you when we talk, you brought up a lot of topics that I didn't know about rare earths. Yep. And I want to share that. But yeah, maybe when you're back, we can give an update how you went on your trip, and before you take off on your holiday, as you say. Yep. All right, George. Thank you.
No worries. Thank you.
All right.